Hello, everyone, and welcome to Digital Container Summit 2021. My name is Harish Manadia from Shipping and Freight Resource, the definitive online resource for the shipping and freight industry in terms of all things educational and news content. We had a very interesting panel discussion on the container trading market with our panelists earlier today, Supal Shah and Christian Leopold. And at least I learned a lot from it. Some of you might have joined the session. Otherwise, I'm sure it will be available as a recording. The keynote in this track today is an interactive keynote to provide an overview of the container trading market. And this keynote is sponsored by DCS Silver sponsor Marco Polo Line Group. And we have a guest speaker, keynote speaker, who is Danny Den Boer, who is the director of SeaCube Containers. And Danny will be taking us through the keynote of the container trading market. If you have any questions, please feel free to type it in the Q&A section, and Danny will try and consolidate all the responses to you as best as he can, or maybe if we have time, we will take some questions at the end of the keynote. So without further ado, I give you your keynote speaker, Danny. Danny, over to you.
Yeah, thank you, Harish. Good morning, good afternoon, good evening. My name is Danny Den Boer. I'm the Director of Sales and Trading at SeaCube Containers. First, I would like to thank Exchange for organizing this summit. I'm really pleased to participate. And I think it's great that we can meet each other virtually. Today's discussions are really about. The screen is not working. Yeah. Today's discussions are really about SeaCube, the growth initiatives from SeaCube, to give you an overview of the container trading market, the challenges in container trading, what kind of impact COVID has on container trading, and we will take a look at the container supply outlook. SeaCube is a leasing company with 82 employees in 7 offices worldwide. We have a global container depot network where we use more than 260 container depots, and we have more than $3 billion in fleet assets. SeaCube was founded in 1993 under the name Carlisle Container Leasing. And afterwards, we had several changes of ownerships, and since since 2013, Ontario Teachers Pension Plan are the owners of SeaCube. And since 2017, SeaCube is the largest reefer purchaser around the globe. We have a total owned fleet of 687,000 units, whereof 64% are refrigerated containers, also known as reefers. 32% are dries and 4% gensets. And that makes us basically one of the largest container leasing companies. We have around 20% global reefer market share, and 93% of our own containers are in a long-term lease with an average remaining term of 3.2 years. SeaCube offers basically 4 products and services, equipment solutions, but we do also offer financing solutions. We are involved in technology and innovation, as well in environmental initiatives. And when we take a look at the strategies and market focus areas of SeaCube, it's really to be and continue to be the refrigerated container market leader, but also focus on technology, the cold chain, as well the military support. We want to expand our share in the dry market, and we want to do more in social services. Well, let's move forward to the container trading market. But before we dive into the trading market, I think it's good to have a closer look on the container market. The global container fleet size was estimated end 2020 around 45.5 million TEU, whereof 90% are dries, which is 41.5 million TEU. 3.4 million TEU are reefers, and 620,000 units, 620,000 TEU are tank containers. And the most common unit type is at this moment the 40-foot high cube dry. And we expect that unit type will continue to be the most common unit type, and that's basically because of the growing volume of lighter cargo. Over the last 20 years, the dry container fleet has grown at an average of around 5%, and that was the same for the tank market. The reefer market has grown at a rate of 6.9%, and that's basically because of the world population, because there's more trade in food, and that we are embracing a more healthier lifestyle. The ownership has been shared more or less equally for both dries as for reefers. You can see in 2009, 2010, the operators / shipping lines, they had a significant higher share, and that was basically due to strong financial performances in the years before. After the global recession in 2009, shipping lines were basically forced to suspend their container production programs, and that resulted to a higher share for the lessors. Traditionally, shipping lines are making it a high priority to build own containers after strong financial performances. And we all know that the shipping lines are performing very well this year, but it really depends on their strategy. We also know that they rather spend and invest in new vessels as well in logistics. One of the examples is that Maersk integrated Damco, CMA CGM acquired Siva Logistics. So we will see what will happen. But I don't think that they will start their own programs like they have done in the past. Due to an increase of units being retired from the marine fleet, we see also a steady increase of volume entering the secondary market. Dry containers have primary useful life of 12 to 15 years. And in this period, they will be used for maritime trades, for intermodal transportation of goods. And after this period, they are disposed into the secondary market, where they can be used for another 20 years or even more for various forms of static storage, but also one-way movements, depending on the condition of the unit. Annually, lessors and shipping lines are selling 4 to 5% of their fleet into the secondary market. The container is a very interesting product with a variety of possibilities, and that's basically because of the construction of the container. They are transportable, they are secure, robust, and a low-cost storage unit, and that became already apparent in the early 80s. And back then, it was not uncommon that used containers were sold for the same price as of when they were new. In the 90s, lessors started to set up their own resale divisions, but also the amount of the number of traders increased, and competition between traders drove margins down. And in 2000, the sales volume entering the secondary market increased to 500,000 TEU. In 2005, that was 1 million TEU. And in 2019, it was estimated that 1.6 million TEU was entering the secondary market. And I think that we can say that the demand has kept pace with supply. Well, as I said, approximately 1.6 million TEU were sold into the resale market in 2019. This had a resale value of $750 million. Supply into the secondary market is really primarily driven by the container shipping business. If the container trade is strong, then the supply tend to reduce. But if marine fleet owners find that they have long idle equipment, they will accelerate sales into the resale market. Supply can also be affected by the changes in new container prices. In normal market conditions, price reductions encourage owners to dispose older equipment into the secondary market, which they replace with more competitively priced new equipment. The demand drivers for equipment in the second-hand market are really coming from the container shipping for one-way or short sea movements, but also from the construction industry to secure static storage, the mining industry, but also from governments for military operations, for humanitarian aid projects, but also from the end users. We see that demand increased. Container resale prices from the early 2000s, we see an upward trend with a small drop in 2009, and the drop was really driven by the global recession. But the upward trend was really driven by the strong container trade growth in the years before, but also the rising container prices and the demand for containers from the construction industry, as well from other established end users. And between 2012 2016, we have seen a fall in prices for both new and used containers. And that was basically because of the slump in raw materials, and prices fall with 50% for both new and used containers. But also the slowing trade growth led to weaker demand for equipment, and therefore to an increase of disposal of all the equipment into the secondary market. Container resale prices are really driven by the new container prices, but it's fundamentally driven by supply and demand. And on the short term, it's always driven by local supply and demand, as well cost and availability of local transportation. But also the condition and the age of equipment could be a price driver. When units entering the secondary market, they are entering the market in one of the below four conditions, which is ISL, cargo worthy, as is, or scrap, where ISL is of course the highest standard, followed by cargo worthy. As is a unit with some damages, or it's wind watertight. And scrap is a unit that cannot be used as a container anymore. Container traders are categorizing each container into a category before they price the container into the market. And we see that lessors and shipping lines are also more involved in categorizing units into criteria to maximize pricing. The impact of COVID and the challenges on container trading, I think we can categorize this into three categories. That's really supply, demand, and pricing. COVID has been a catalyst for the development of equipment shortages in the secondary market. And as many of you know, the supply of equipment is very tight at this moment. But the core of the problem is not vessel or equipment shortages. The problems are really the measurements and the protocols related to COVID. And that creates port congestion. One of the examples was 2 weeks ago in Ningbo, where one worker at the terminal was infected, and the terminal, which had a 25% share in Ningbo, had to close their doors for a number of days. And that creates port congestion, but also disruption in global trades. It creates shipping bottlenecks, and But also, although we are at production record levels in 2021 in terms of new containers, the closure in the beginning of 2020, when COVID really started to affect around the globe, that caused also that less containers were disposed into the secondary market. Demand at the beginning of this pandemic in March 2020, COVID really started to affect around the globe, and I think we were all very concerned about the impact and the challenges this would have on our business. Surprisingly, the demand for containers was very strong quickly after April 2020. That was basically because consumers shifted spending from services to products. And that created also a higher demand for equipment. So instead of spending money in a restaurant, we started to spend our money online. And therefore, we have seen an increase in demand. But there was also still a strong demand to secure storage for the construction, mining, and manufacturing sites. And I think also the public awareness of containers that created a higher demand for containers. But the current demand exceeds supply significantly. That's for sure. And since prices are fundamentally driven by supply and demand, and we discussed on the last two slides those two items, we see that the prices for both new and used equipment has been increased significantly. The shortages led to high demand, and the prices for new built equipment has been increased as well. That's basically because of the demand, but also lower production space and the higher cost of raw materials. The challenges in container trading are really, I think, for most traders, the shortage of equipment. I don't think we have seen anything like this before. But also the low vessel capacity is a challenge for lessors, for shipping, for lessors, and for container traders. Because it makes it difficult to move units from low demand locations to higher demand locations, and in this market there are still some lower demand locations. So that's is also creating a challenge. Also, units that we sell in cargo virtual ISL condition, which are supposed to be used for export purposes, we see a delay in pickups, basically because our customers cannot find space on board of vessels. Trading companies need to spend more time to find equipment, but we also see that some buyers are reluctant to buy on speculation, and that's basically because of the equipment pricing and the condition of the equipment. All the units are at the shipping lines are fully utilized, so we see very few containers into the secondary market, and the units that are entering the secondary market, they are getting older and the condition is declining. And some buyers are reluctant to buy these units, especially buyers who have a focus on the end user market. We see some pushback. Yeah, when we take a look at the market outlook, the outlook is definitely overshadowed by the effects of COVID-19. I think that the short-term outlook is more positive than negative. The demand for equipment will most likely remain till Q2 2022. But again, it really depends on the developments of COVID and potential new variants. The Delta variant is a variant that we need to monitor closely. We don't know what will happen and what kind of measurements will be taken. And when trade patterns will re-establish, the resale market prices could be tested by the increasing volume of equipment due to be disposed. And the longer-term outlook is uncertain due to rising interest rates, but also because of monetary easing is being pulled back. And when we take a look at the GDP number and we compare it with the container trade growth, we see some similarities. And the forecast is that we will see some softening. But again, it's definitely overshadowed by the effects of COVID-19. And this was my presentations. If there are any questions about SeaCube, about our products or services, or these presentations, I'm happy to answer them.
Thank you, Danny. Thanks for an enlightening presentation. It's quite interesting to see how things have progressed over the few years or the past years, and also it's also a bit interesting to see where it is going. And you've covered a comprehensive market information, and thank you for that. We do have a few questions. One of them is, what role is or can technology play in container leasing and trading in terms of, for example, assessing container condition and status of that?
Well, technology could be an important part, especially for reefer equipment. We can, when we enter units into the secondary market, we can see how many miles the reefer container has on it, basically. So I think it could be a very important role to determine also the condition of the unit.
Okay, and that part of the business is still not developed as much as it should be, I suppose, in terms of technology or using technology to identify the or assess the condition of containers. It's not where it should be. Am I right?
No, that's correct. I think we are in the beginning of technology, but I think this will have a significant impact the coming years on container trading as well.
Okay. There's another question here. It says, how much further do you expect the market to move in this fashion upwards till it caps out?
Well,
that's
really difficult to predict. I think it really depends on the COVID measurements taken by governments. So we don't know what will happen. But what we think is that the strong demand for equipment will continue to till Q2 2022. And after that, it's really overshadowed by COVID, but we might see some easing.
Good. And another question that has come up is, in the secondary market, a 20-year-old container, is it still worth to buy for exports? And is it allowed in terms of maritime regulations? Is there any specific issues with that?
Sorry, one more time, Harish.
The containers that you buy in the secondary market, if it is a 20-year-old container, is it okay to use for exports? And is there any regulations or restrictions in terms of using that containers of that age?
Well, it really depends on the maintenance of the container. If the container has been maintained under normal conditions, it can be used. The depots are checking whether the unit is cargo worthy or in ISL condition. But for a 20-year-old container, I would say it's in either in an as-is or in a cargo worthy condition. And if the maintenance was done properly, I would say yes, it could still be used for export purposes.
Okay, because there are, I mean, now especially with the shortages in the market, I'm sure many customers will be looking at these kind of options because containers are not readily available, and that is a serious concern for many customers. And
Yeah, and
do you have any idea of the number of new containers that will be coming online shortly? Is there any volumes on that?
The last numbers I've seen is that year to date we are at 5 million TU that we're entering into the market.
Wow. Okay, so that is quite a large number of containers coming. So that should be enough to satisfy the global demand, I suppose.
I think so too. Yeah, I think so too.
All right. I think we have time for one last question. As far as SeaCube is concerned, what sort of price increase have you seen in the container prices percentage wise over the last couple of years, especially now with the demand the way it is?
Well, it really depends by location. Of course, in the main ports we have seen significant price increases. We have seen increases for 40-foot high cubes. We come from 2 years ago, we were at the price level of $1,650, and we have now also unit sales of $4,500. So, but it really depends by location. But it gives you an indication the difference between now and 2 years ago. So yeah, we have seen significant increases, absolutely. But again, it's really depending on the local supply and demand.
All right. Do you think you can take one last question?
Sure.
What would be the age for selling tank containers versus dryers and reefers? Means is there a difference in the age restriction for each container type?
Well, for tank containers, I really don't know. We are not involved in tanks,
Okay.
So that's something I need to take offline, and we'll need to find out. So if
and between dryers and reefers, well, what is the sort of age gap or age allowed?
Well, you see that containers that are entering the secondary market are between 12 and 15 years old, and that's basically the same for dryers and for reefer containers.
Okay. All right. Thank you very much, Danny, for the great presentation and good keynote. We've definitely learned a lot, and thank you for all the to all the attendees, and thank you to the sponsor Marco Polo Line Group, and also to Container Exchange for making this happen. I think we can close the session now, and I wish everybody a good day. Thank you, Danny, again.